Why should you invest when you're young? Sometimes people don't want to think that much about money when they're young, but you can start with small investments early. First of all, the longer you have, the more your investments will grow. This is because of a little thing called compound interest. Let's take a look at the difference that compound interest can make. Imagine that you invest $500 every month. You leave it alone and don't touch it until you're 65. If you start investing when you're 18 and it grows at a 4% compounded monthly interest rate, by the time you're 65, you will have $833,223. If you wait until you're 35 and you start doing the same investment then, by the time you're 65, you will have $348,861. That's a huge difference. Just for getting started early, being consistent with your investments, and giving your money the time to grow. Compound interest isn't a straight, gradual line of growth. It's exponential. The money you earned will earn more money for you. It is earning interest on interest. Essentially, the money you invested will do the work for you. And every time it grows, it's growing at a faster pace. Another good reason to invest early is as a young investor, you can take on more risk. We know that investments with higher risks will also give higher returns. Young investors often benefit from being an aggressive investor, which means choosing riskier investment options like stocks or investment portfolios labeled as growth. Why is that? Because you have a greater advantage to ride out the rise and fall of the economy. What does that mean? Throughout history, the economy has risen and fallen, sometimes very dramatically. For example, during the financial crisis in 2008, the stock market took a nosedive and fell by 49%. The S&P 500 is just a collection of stocks from different large companies. If you had a stock in 2007 worth $1,526, it fell to $683 in 2009. But if you kept the stock in there and didn't touch it, eventually it would be worth $4,000 in 2022. If you invest while you're young, you have the time to ride out these waves, especially the big ones. So start early and watch the power of compounding work for you. And don't panic when the economy does bad, because it will, but you have the time to wait it out, and your money will grow. If you don't have the money to invest right now, that's okay. When you are ready, you can start small. Remember that investments always carry some risks, so be prepared to earn but also to lose along the way. But when you invest when you're young, you have opportunities to recover what you lost. And as you gain more experience with investing, you will get better, just like with everything else. A lot of young people aren't investing yet, but we hope this video gave you some new perspectives. By starting early, you have a great advantage. Remember, you benefit greatly from the power of compounding. You can take on more risk, which means higher returns. Remember that any investments carry some risk, but you have more time to weather the storms, so you can wait things out. And you have time to learn and grow as you watch your money grow.